What's up, everyone, and welcome to the Prosperity Through Multifamily Real Estate Investing podcast. As always, I'm your host, and joining me finally again from a long absence, Mr. John Beatty.
Been a pleasure. So I've had a bit of an absence. My wife and I took a lovely 10-year anniversary vacation. During the Roni Rona, uh, to Arizona, and we've been out for a minute. But we appreciate you hanging true, Cody.
Yeah, listen, no excuses, okay? Next time, I need to get your priorities straight, number one. I thought I was going to have to go change the intro to the show, and Brian did such a good job of filling in your spot. I don't know. He's giving you a good run for your money. But glad to have you back, buddy. Welcome back.
I'm fine with that. Yeah, no, it's great. It's great to be back. I was just showing you before the show. My microphone's got a flat spot because my kids had a WWE match last night coming off the top rope, nailed my microphone cover. But anyways, we've got a great guest for you tonight, everyone. This Bruce Peterson's with us, and if you don't know anything about Bruce, he's an author, he's a speaker, and he's a serial syndicator. He's gotten awards from the National Apartment Association for Independent Rental Owner of the Year, which is a big accolade. We just saw him and his wife in Austin this year. They're giving a bit of an education to wannabe syndicators in the area. And overall, just fantastic. I would highly recommend you read his book. It's on Amazon. It's called Syndicating is a Bitch, with the I, with a,
Yeah, thank you, Amazon.
Was that an Amazon special?
Well, yeah, if I didn't take out the I and replace it with an asterisk, they wouldn't let me sell it on their site.
I think it's great. And it's a great read. Effectively, it basically tries to convert people. It tells people the behind the scenes nightmare that is syndication. And as you say in your preference, Bruce, only about 20 or 30% of the people that you actually talk to are probably, cut out for the task of managing all the craziness that comes with it. But without further ado, we got Bruce on tonight. So Bruce, appreciate you coming on.
Thanks for having me, guys.
Absolutely, Bruce. It's an honor, and as John alluded to, at the time of this recording, I think it's been about 5 or 6 weeks ago that we got to visit with you in Austin, Texas, and just really, really excited to have you on the show. So, you got a very interesting background on how you kind of got started in the real estate space. Kind of tell us a little bit more about your journey and kind of how you got involved in commercial real estate.
So, like many people, I didn't start out going this path at all. I started out in retail, believe it or not. I'm a college dropout, so that kind of dropped me into retail, right? So without a degree, it was hard to get any kind of a real job, I guess, or any kind of a high paying job at the beginning. It worked itself out. I made pretty good money toward the end because I was climbing that corporate ladder, lots more responsibility, tons more hours, but getting more pay as I went. But I did that for 18 to 20 years, hit a wall, walked away. I was out of shape. This is going to sound pathetic, right? But it's just what it was. I was out of shape. I was lonely. I was bored socially in my real life, right? Outside of work. I was depressed, had no relationship of any kind with anybody. So, I just had to make a change. I was making pretty good money. I was saving a lot of money. I was investing very well, doing great in the stock market, but I just couldn't keep doing it anymore. So I quit again at the age of 42. And about maybe a year or two later, I realized I got to figure something else out to do now, because I can only play in my front yard, picking daisies and planting crap for so long. Again, I'm alone, right, out in the suburbs of Austin. And so I started looking around for what's the next thing. And I found somebody that was willing to teach me how to invest in apartment complexes. So I thought, shit, let's give it a shot. And it's the best thing I've ever done. Coming from a retail background, college dropout, none of that mattered. I had equity to get started. I had time now. And I had intelligence, right? I don't have an advanced degree. I don't have a degree at all for that matter, but you don't have to have a degree. You could go off to Texas A&M and the great real estate program there. Fantastic. But you don't have to either. And I'm living proof of that. So been doing it for about, I think we're coming up on 9 years now. Bought our first property in 2012. And, it's the best thing I've ever done. It's the most rewarding, the most challenging, honestly. But, man, I wouldn't change it for the world.
Yeah, that's awesome, man. And I like the fact that you just skip single family altogether, which most real estate entrepreneurs seem to kind of find their entry into the space through the single family, and then they kind of level up as they go or advance in their experience. But you went straight to the commercial space, which I try to encourage everybody to do now. I mean, it's a phenomenal vehicle, but I really appreciate that. So.
Yeah, so a lot of people, most people will start single family, some because they don't have the money to get into multifamily. That's a legitimate thing. But the rest of them, and I would say maybe 60 or 70% of them, they're just scared.
Mm-hmm.
Well, I don't know how to do that. Well, you didn't know how to code, or you didn't know how to draw blood. Whatever you do for a living, you didn't know how to swing a baseball bat or a golf club at some point either. You just got to go learn it. So I think people are scared and intimidated by the space. But honestly, I firmly believe this. It is easier. Now, yes, I have never directly owned single family rentals, duplex, triplex, fourplex, any of that stuff. I've never owned any of that. But I know by talking to the people around me and watching friends that are slogging through that crap, that's a hell of a lot harder, and it's a hell of a lot riskier, and the payoff is not nearly as large. So yeah, I think everybody should get to commercial when it's right for them, but as soon as they can.
Yeah, I've kind of been down that road, so that kind of rings a little bit close to home there. Learned some tough, expensive lessons in the single family space, and listen, there's a lot of people that are successful at it, and we don't diminish that by any means. I mean, listen, you put your mind to anything, you get yourself educated, you can be successful at whatever. But we just definitely, obviously, have the same alignment of interest here, where we value the apartment world and commercial real estate. But that kind of leads me into, I kind of want to just jump right into kind of the motivation behind your book. And again, I'm gonna put it on the screen here for those who may be watching, as John alluded to earlier. I love your approach. You're a very straight shooter. There's no bluff. You tell it like it is, which is, just how the book is written, and which I absolutely love. And you mentioned this earlier, this has been a very rewarding journey, but it's also been one of the most challenging things you do. And I think it's very easy to kind of go to the guru seminars or, various networking events, and you hear the hoorah, but you don't hear enough about, man, this is a lot of work, and you're going to get your teeth kicked along the way. So I want to kind of talk a little bit about what your motivation behind writing the book is, and kind of what the need was to put this out in the market for others to learn from.
Well, it's basically what you said. I was tired of people getting, I don't want to say duped, because that's a really strongly negatively connotated word, but it almost is that people are getting duped. They're in these rooms and these seminars, these weekend events that are free. They're not free. They're trying to sell you something, right? And they're not bad people, and they have good programs, almost all of them. There are a few schmucks out there, but by and large, I know most of them, and they're good people selling a good product, but they have an objective that might not be completely aligned with you. They're trying to sell you a $5 to maybe $30 or $40,000 program to teach you how to do this stuff. So for you to be willing to write a check, give them your money, they might not tell you all the real truth, right? They might tell you some of it. They won't lie to you. They can't. That's against the law. They'll go to jail. But they're also not going to tell you the scary stories. They're not going to give you the warts and all the battles that we go through, because if they do that, it's going to scare you, and you're going to go, oh, hell, I don't want any part of this. So they kind of gloss over that if they talk about it at all. So now you get swept up in this emotion, the fervor in the room, and the adrenaline's raging, and oh my God, look at all the money I'm going to make yesterday if I join today. So that emotion takes hold. You write somebody a $20,000 check, you leave, and a week or two later, you start your education with them. A month or two goes by, and you start realizing, son of a bitch, this is a lot harder than they made it sound. So again, they're not lying to you. All the things that they're telling you on stage are probably true, but it's a lot of work to get there. There's a lot of trial, tribulation. I don't care how good your coach is, your mentor is, how many books, how many podcasts. And so you get your ass in there on the field and you actually do it. You just don't realize how hard it is. So I wanted to write the book, not to try to dissuade people from doing it, because I think if you have what it takes to do it, you should do it. It's crazy lucrative. It's crazy rewarding. I can make a massive impact on the world. As hyperbolic and kumbaya as that crap sounds, I have over 1,000 units that I've syndicated. And so that's thousands and thousands and thousands of people I've been able to impact directly or indirectly with my staff, my investors, my tenants, their families. So I get to make a huge impact. So I would like to see everybody do it, but I realize a lot of people shouldn't do it because what you said, and I'll kind of R-rate it up. You're going to get a nut punch, right? You're going to get kicked in the nether region. And how are you going to deal with that? Most people don't have the intestinal fortitude to work through it. And there's nothing wrong with that. I just need people to understand that it's coming if you do this enough. And if you're not mentally prepared to deal with it, then please do not do this. Find something else that does kind of light you on fire, light you up, and that you will succeed at.
Yeah.
Everyone has a plan until they get punched in the face.
Mike Tyson.
Mike
That's
Tyson.
right.
Well, and I love in the start of your book, you come right out of the gate in saying that, look, this book is going to tell you what type of person you are, right? If you're made for this business or not. And I'm paraphrasing, of course, but and without giving away the details of the book, after each chapter, after you describe each step of building this business and the challenges that come with each step, it's like, look, here's the question. Do you think you're man enough to or woman enough to take on this challenge? If so, great. Let's go to the next chapter. But if not, I just saved you a bunch of time and effort.
Yeah, I give you off ramps throughout the entire book that if you kept going past all those off ramps and kept going, well, great. This is a great career for you. But yeah, I'm trying to give people permission to not do it if they don't want to.
I like to tell people at first, don't calculate the hours that you have to put into this. Because you won't like that hourly rate.
At the beginning, no. My first
beginning, you will not like that hourly rate.
Yeah, my first deal didn't come close to paying my bills, but you know what? It was my starter property. I had to learn somewhere. It was invaluable learning. And now, you do it long enough, you're successful enough, you've got a big enough organization. So now I'm just the CEO. I'm setting the culture and the tempo and the course for my company. And I have a lot of people, again, more people that I'm creating jobs for that are executing my daily stuff.
Yeah. Love that. I think that's the goal, right? Is to get to that point. And as the great Neil Bawa says, he tries to work himself out of a job every company he starts, right? I mean, the goal is to get it to where it's automated. And like you said, you set the vision and the culture, and then, let the rest of the business take care of itself. But listen, I want to go back and kind of, see if you wouldn't mind sharing some of the challenges that you've had along the journey that you kind of reference in the book. There's one particular example that I hope you'll highlight, and if not, we'll ask about it. But just give us some examples of some things what are the things that people aren't talking about that you may come across in this business that could derail you?
Well, one of the things that people aren't talking about, because either they just don't want to talk about it, or honestly, most people have just never encountered it, right? And what you're talking about probably is my $5 million hickey, right? So I say hickey, that's a little exaggerated because it all worked itself out. But the day we're going to close on a 250 unit property in Central Texas, we initiate the wire. We go to the parking lot of the apartment complex and waiting for word that the wire has been received by the seller. As soon as that happens, now we can walk in because now we own the place. It's our new baby boy and we get to go play with it. And so, a couple of hours go by, and it usually takes an hour or two to clear the system and for the seller to receive it. Well, a couple of hours go by, nobody's seen anything. Another hour or two goes by, still nobody's seen anything. 1, 2, 3 o'clock comes along, still nothing. I've got my attorney screaming at me on the phone because she's being screamed at by the seller's attorney, that they think I'm jerking him around, or he didn't really wire it, or where did it go? I'm like, I don't know where it went. I called the bank and I got, confirmation that it did leave the bank. Well, the seller never received it. It's 6, 7 hours later. This is highly irregular. Nobody knows what the hell is going on. The bank doesn't know what's going on. I don't. My attorney doesn't. Their attorney doesn't. Nobody knows anything. And there's all this chatter going around for about 6 months to a year about some people that were having wire transfers intercepted by, getting stuck, inserting themselves in the process and rerouting that wire transfer to their account and then fleeing the country or whatever. So I thought, oh my God, somebody hijacked our money. And so now the end of the day comes and I have to walk out of the apartment complex because I don't own it. They never got the wire transfer, so we don't own the property. So now as a syndicator, I have to explain to our investors that, you know what, I'm sorry, today was close day. This is a happy day usually, but we didn't get it closed. I'm sorry. It just didn't happen. But I've got some more good news. I don't know where any of your money is. $5.2 million has vanished, best I can tell. Me and my wife have, I think, $100,000, but my family as a whole probably has $300,000 or $400,000 invested in this deal. But the balance of that's a $4.8 million that belongs to investors. And I have to own up to that. I have to be out in front of that and tell them that we don't have the property and I don't know where it is. But you have my word. I will do everything I can to figure it out. We finally figured it out and it was fine. A division, a governmental agency, OFAC, confiscated my money because they're checking the wire against known bad actors internationally that are money launderers, maybe they're drug cartels, terrorist organizations. And if anybody on their list happens to be one of the names on this wire transfer, they grab it and they have 2 weeks to research. Well, the name of the property I was buying was the name of a Colombian drug cartel. Well, of course, their charter says grab that money and figure it out. They don't tell you they took it. It's the government. They're not going to call me, hey, Bruce, we got your money, bro. Like, no, they just take my money. But that was on a Friday. Monday, we got it all figured out because the president of the title company had seen it once before, about 8 years prior. So we got it all worked out. But that's one of those things that it's happened to me again since. So this stuff does happen. And if you aren't working with an experienced coach or have somebody telling you about this stuff, like in this book, you're not going to know what to do when that happens. And you may very well lose your shit.
That would make you pucker up pretty tight.
I was going to ask you, did you have to change your underwear after you got notified that we don't know where that money's at?
No, because I'm pretty risk tolerant. I've got this weird internal thing that I know things will always work out. Now, it could have not worked out. They could have literally had somebody come in and steal it from me, and then I'm screwed. If that had happened, I'm financially ruined. I'm bankrupt. I'm worth a fair amount of money at that point, but I sure as hell don't have $5 million in my back pocket that I can make everybody whole. So all my stuff's invested, so it would have financially destroyed me. But my wife is the CFO of our companies, and I'm the CEO. Well, my CFO wife is the CFO because she's a CPA. Well, a CPA has a different brain than an entrepreneur a lot of times. I mean, she is an entrepreneur, but she's got a very B personality, analytical brain, very conservative. And when I told her, well, first I took her to a restaurant after we left the property on that Friday, gave her a few drinks, and then said, oh, by the way, yeah, you saw we walked out of the property without any keys, right? We don't own it. You know that. Well, let me explain to you what happened. She didn't respond well to it, but you know what? We got through it.
Well, they say behind every good man, there's a good woman. So it sounds like you got a good partner in life and a good business partner there. So that's that's good. I remember reading that in the book and was like, holy smokes. Like I couldn't even begin to fathom what would be running through my mind having to be faced with the fact that $5 million just went poof, yep. And, like it's just crazy. But obviously glad it worked out. You have a little bit of experience from that. And I guess that's the one benefit of it is you've been through it once, it happened to you again. You kind of know how to handle the situation and more importantly, the conversations with the investors.
Oh, you can keep people calm as well.
Right.
Yeah.
Exactly.
Yeah. But, again, you referenced, hey, that's kind of a rare one-off. What are some of the other common challenges that you've kind of been undergoing through your business that other people should be very much aware of?
I don't know if anything's really that common, honestly, that would, make you think that it happens consistently or very often. I don't really have a lot of that stuff. The hardest thing that we deal with, though, honestly, on a day-to-day basis, we have our own management company. We have one in Austin and we have one in Nashville. So most people won't have their own management company. They'll third party to another company. But because we have that, that's the most difficult thing on a daily basis, is dealing with the employees. I love my employees and I love dealing with the employees, but it's a never ending job process. You know, it's a fairly blue collar industry. You think blue collar, you're thinking of somebody working on an assembly line in a plant, but I mean, they're not necessarily going to have a degree themselves. Very many people in this industry don't have degrees. It's kind of a transient industry. People are moving in and out of jobs and moving around the country a lot. So you always have staffing issues that you're dealing with. And then every once in a while, you're going to screw up and have a bad hire like everybody does. Well, then as the CEO, I still get very involved when we have to let somebody go, to be professional to that person, but also, to be frank, to protect my ass, right? To make sure we do it professionally and with respect, because you can fire somebody with respect. So I'm involved on that end, but that's the hardest thing. Outside of that, you know, another thing that has to do with money is, you know, people put up earnest money when you're trying to buy a property, right? And that's usually going to be 1%. Just because you get into a deal, you put up a 1% earnest money deposit, you terminate the contract before the expiration of your due diligence, which technically that means almost always, well, I get my money back. You might keep $1,000 as an option fee, but I get all my earnest money back. We'll go, yeah, that's true. But if the seller or the buyer, whatever side of the transaction you're on, if the other side of the transaction refuses to cooperate, doesn't matter. The title company will not release the money, even though you are legally, you know, allowed to have it. It's legally your money. They will not do it unless they have a sign off by both parties. And if that other side of the transaction decides, no, I just want to be a pain in your ass. And that's happened to me 3 times now. I have to sue to get my earnest money back. Or one time I had to sue to confiscate the earnest money of somebody that backed out at the very last second. So that stuff, again, that stuff you're going to deal with. How are you going to handle if you're waiting on a $250,000 earnest money check to be returned to you and it's not getting returned to you? And it might take 6 months through the legal system. What are you going to do? You know, so there's a lot to it. But again, it's great. It's fun. It's rewarding. It's lucrative. But there's a whole lot of stuff that goes with it.
Yeah, that's right. And, you know, the other kind of complicating factor, actually not complicating factor, but and I think it's your 5th chapter, you talk about marketing, right? So your tagline is marketing never stops. So you've got all these things you have to worry about operationally with employees and transactions going through, but you also have to, you know, bring in investor money.
Right.
And and give credit to you, App Guide, Apartment Guy is a great brand. And it's, I mean, you can tell you put a lot of work into it, but give us a little story about how you manage marketing and how you keep it going.
Well, it's just being as active as I can. And I'm very transparent. I tell you who I am. I tell you the struggles that I have. I'm very vulnerable. You know, I put my shit on the table. Yeah. If I'm trying to help you, but I won't tell you my truth, well, that feels disingenuous, or like it's not going to help you the way I need it to help you. So I bare my soul to a degree, right? I suck at networking. It's painful for me. I really get uptight. I get anxious, and I literally will run out of the room because I can't do it. You put me on stage in front of 5,000 people, I'm on fire. I love that. It fuels me, it drives me, and I love it. But you put me in a room to network with people that I don't know, but I've got to make connections and relationships. So maybe someday they will want to invest with me. I can't do it. So what I've done is, you know, my wife is a social butterfly. She hates being on stage, but she's a former flight attendant. So she's great at small talk. That's what her job was as a flight attendant. She would lots of small talk with people. So I know I recognized a weakness that I had. So I basically just follow her around the damn room like a puppy dog, you know, and again, I'm not ashamed to admit that. It's who I am. I have to be self-aware enough to know I suck at this. What can I do to, you know, overcome my issue? And that's what it is. I just follow around a very attractive, very intelligent, well-spoken woman. And I just let her break the ice for me. I come up, join the conversation, then she moves off to the next person. I wander off slowly and then find her again and start talking to that person. So, you know, that's the hardest thing for me with marketing. But again, it never stops. You got to go to every single thing you can go to, painful or not. If you want to be successful at this, if you're like me, I hope you have somebody like my wife in your world that can help shore up that side of your weakness. But you got to figure it out somehow, because, you know, people say, oh, no, I'm done. I closed my deal. Do you never want to do another deal? Well, of course, but it's going to take me 3 months don't stop raising money, because you just depleted the money from that group of people, very likely. So you'd have to have another set of people that you can go tap. As a syndicator, you can make a lot. This is my goofy little maxim, I guess. You can make a lot of people a lot of money, but if you can't raise any money, you can't make anybody any money, right? So you have to keep raising money. That's why I am the apartment guy. That's why I have the license plate on my freaking car that says APT guy. You know, I'm that douchebag now, but I realized I'm in the business of raising money. That is my profession now. I can do a lot of good with that money, but at the bottom of it all, I raise money for a living.
Mm-hmm. Yeah, I love that. You mentioned a couple things in there that, I want to kind of go back and echo. And, number one, just your transparency. I think anybody who's going to listen to the show, if they've had the fortunate pleasure of being able to see you speak on stage, read your book, I mean, what you see is what you get. Bruce is Bruce in every platform, and absolutely love that. Yeah. And again, I love that approach again, because it's just no BS. It's no fluff, which we respect, of course. And then, as you were talking about, marketing and your capital raiser, it's just some of the many, many hats that you have to wear in this business. And every one of them come with their own set of challenges and their own barriers that you have to break through. Right. And, I think, again, it just kind of piggybacks off the basis of the book is that, look, I mean, it's not for everybody. Let's be frank. It just really isn't. And as you alluded to, you got to really identify what your strengths and weaknesses are. And either you got to figure it out or put people around you that can complement your weaknesses or whatnot. Because otherwise, there's no way possible that you can scale any substantial business and do this on your own. There's just no way, So I appreciate that.
Yeah, absolutely.
Cool. Well, let's kind of pivot, Bruce, if we can. I want to talk a little bit more about, kind of the I cannot speak, excuse me, some of the aspects of your business. Let's keep it simple. Thank God for edit. But, let's kind of talk about some of the basics of your business. And, you mentioned that you're vertically integrated. You guys have your property management in-house. And, anytime that we have a guest on that's vertically integrated, I always kind of like to dig into that just a little bit. And then we can kind of pivot off that. But, kind of what was some of the reasoning behind, pulling your own management in-house and what benefits has that added to your business?
Well, I was lucky. The coach that I found early on, made me understand that, look, you can run a management company. And their belief was, and I kind of agree with this to a degree, at least, that nobody's going to care for your property like you're going to care for your property. So you're probably going to run it better than them. As long as you'll apply yourself, learn your trade very well, and apply that, well, then you're probably going to do better than hiring a third-party management company to come in and do it for you. So I believed that, and I trusted in them, and they kind of taught me how to kind of get that off the ground, how to hire employees, because I'd hired and fired my whole life, but I'd never hired apartment staff. I don't know what to ask these people. I don't know how to screen these people. So, they taught me how to do that. But, again, it was basically just following a coach, listening to somebody more experienced and better at this than me, and having faith in what they're telling me, and then going out and executing that. And that's really all I did. I'm glad I did it. I love having a management company. It is honestly the hardest part of owning apartment complexes. And that's why most people won't do it, because it is the day-to-day grind. As a syndicator, you're always networking, but to some degree, that's just fun. You're hanging out, having drinks with somebody, you're going to conferences. The day-to-day trudge is running that management company. But yeah, I've done it almost from the very beginning, and I really like it. And then selfishly, it's a huge part of my income. I don't want people to go start a management company for the income. Do it for other, I guess, better reasons that just happen to put more money in your pocket, right? because it's a lot of work. And if you're only doing it for the money, probably not going to go well.
Yeah.
And I think the income thing is actually important to talk about because it helps align some more incentives as if you're only a syndicator, only like fixing deals, you could be incented if you're reliant on a lot of your acquisition fees. For instance, I know you're in the no acquisition fee camps, but there are a lot of folks that actually have, an entire income stream just from acquisition and getting into deals, not necessarily getting out of deals.
Right.
And that makes me feel comfortable as an investor. I'm like, okay, they've got their own management company. If they don't do a deal for 12 months because of, coronavirus or pick your favorite thing, they're not going to be desperate to try to just get people into a deal.
Right. And that's, there's a form of for why I don't charge acquisition fees, disposition fees, or refinance fees, because I don't like the thought of what that is, right? It's very lucrative. I buy $20 million assets, $25 million assets. If I have a 2% acquisition fee, I want to make $400,000 to $500,000 a day we close the property. Great for me, but you see the beach behind me, right? Yes, I'm on a beach, by the way. That's not a backdrop. But I get that $400,000 to $500,000 check when we close, and then let's say I run it right into the ground. We lose the property to the bank. They foreclose on us. I don't care. I got my money. Sorry, the rest of you lost your money, but I got paid. Right. I just have a big problem with that. So I don't like being compensated for something that I haven't done yet. So I don't charge those fees. But because of that, that's a huge piece of the income pie that I'm going to forego. Well, I got to do something to make this financially worth my while, or there's no sense in doing it. So I don't give preferred returns either, right? So it's a give and take. We will, in my brain, we all make money together, but I'm not going to nail you with a sunk cost day one of operations. So that's why I do it.
Yeah, that's a perfect segue into a conversation I was hoping we were going to get to is, your position on the equity structure and the no pref model. And this is something that John and Brian and ourselves internally, we've had this paradigm shift over this year into more of this, straight equity model for many reasons, as you just alluded to. But, I think one of the most important things you also mentioned this, I'll echo it again, is your alignment of interest is always going to be in line with the passive investors with the straight equity, right? I mean, if the deal doesn't perform or whatnot, you're not incentivized to go try to do another deal just to transact so you can get paid as a sponsor. You're always in line with the LPs. But some would argue that, okay, well, if I'm an operator and I'm putting a deal together and I'm not getting an acquisition fee or an asset management fee, there's a lot of upfront costs, due diligence costs, things like that to get the deal going before you even get to the close table. Where's the incentive in I guess all the upfront work, like how do you have a very interesting way of kind of still being able to benefit from some of the extra equity. I don't know if that's the right terminology I want to use, but you have different ways of getting around that I was hoping you could kind of speak to.
So I think what you're trying to get to is, the way I structure my promote, right? So, okay, again, I don't take an acquisition fee, a disposition, or a refinance fee, but what I do, so there's really kind of two camps for the way you structure your promote. There are all kinds of other ways to do it, but these are the two main things that I see. That you do it as an override or you do it as a reallocation or retained ownership, whatever you want to call that. An override simplistically means I have, say, a 20% promote. Anytime cash flow distribution, any kind of a cash distribution goes out to the partnership from a sale, from a refinance, from just operational cash flow, whatever, I take my 20% promote off the top. So if I would send a $100,000 distribution out to my partnership, I take $20,000 off the top. They share on a pro rata basis in the remaining $80,000. So if they own 10% of the deal, they get 10% of that remainder $80,000. So they get $8,000, right? So that's an override. You could do that with your cash flow distributions, your finance distributions, and your sale distributions. What I do is what I call reallocation. Some people will refer to it as a retained ownership. So I take my promote in the form of equity shares. So I actually get to book true equity. It has the same basic effect on cash flow distributions. I own 20% of the company. They own 80% of the company. So when $100,000 goes up, it's still the same split. I get my 20,000, they get their percentage of what's left, right? And that confuses people. So what I try to explain to people, say, watch Shark Tank. People will come on, say, I'm looking for a $100,000 investment. And for that, I will sell you 10% of my company, 20% of my company, whatever. That's exactly what I'm doing. I'm selling 80% of my company. I'm going to retain 20% of it for myself, but I'm going to sell 80% of it. If you put up 10% of the money to buy that 80%, well, then you have 8% of the equity because you put in 10% of that 80%. So it's a little weird, but that's the way it works. So now, again, it has the same basic effect when I send distributions out. But as a sponsor, what it does for me, I got to continue. I have to have a certain amount of net worth to sign on loans, right? So I like the fact that my approach, taking in straight equity, hits my personal balance sheet or my personal financial statement. So it improves my net worth. I can't spend my net worth, but the bank wants to see that I have substantial net worth for them to agree to lend me money. So it really helps me there. If I do an override, I don't get any equity out of it. So I don't get this bonus, right? And then the second part, and a really, really large part of it, this might be over a lot of people's heads, but you'll learn it eventually. You can come back to this as a reference material later. But when I take 20% equity for my promote, I get 20% of the loss that that company generates on an annual basis. And if you run these properties the most efficient way, we'll put it that way, you're going to employ depreciation, and then even sped up depreciation, accelerated depreciation, which is called cost segregation, right? I have properties that my annual loss on paper is a $2 million loss for the property. We put cash flow in our pockets, but because we have a lot of expenses, including the depreciation, the cost segregated depreciation, we generate so much loss in the eyes of the IRS. None of us pay any taxes on it, on the cash flow, because we show a loss on paper. But now, let's say we had $100,000 of distributions for the year. We had a $2 million loss. Well, you have an overrun loss of $1.9 million. Everybody that's invested in this deal gets their share of that $1.9 million loss that comes to them for their personal tax return. If you're not a real estate professional, you can't use much of it. If you can use any of it. As a real estate professional, I can use every dime of it. So let's say I contributed 10% to the deal. I get 10% of that 1.9. That's $190,000 of that loss. I get to apply to my personal earned income that maybe my wife earned in another job, or maybe I earned in another job or another company, right? But if I got 10% of the company there, but I also get 20% of the equity for my promote, I effectively own 30% of the company. So now I don't get 10% of that loss. I get 30% of that loss. So instead of 190,000, I get $570,000 that I get to use to offset earnings on my personal tax return. And let's say I only earned $250,000 that year, right? Well, then all that unused loss, it sits there and you get to use it the next year or the next year or the next year. I have got over $1 million in loss sitting on the books that I haven't been able to use yet because of this strategy. So the next, let's call it $1 million in earnings, it's all offset by that. So that's another huge benefit to what I do.
We love this strategy, by the way. We heard you talk about it a few weeks ago, and we spoke to a few of the experts that helped you put it together, and it's just, this is a brilliant structure. And again, even leveraging net worth to buy bigger and larger deals to show net worth and liquidity to the lenders. the tax depreciation shield and the carry forward, especially if you're a real estate professional, all wonderful things. So thanks for sharing this one. We really appreciate this. And
Of
I think
course,
our
but
listeners will.
I'll tell you the impetus of it. What created this? When I first started this, I've done this from the beginning because I've always believed the simpler I can keep my deal structured, the more likely I am to get an investor. Because I can literally give you a deal, put a deal in front of you that will make you 100% profit every single day. But if I complicate the shit out of it, your eyes will roll back in your head. I could have made you rich in 3 days, but I couldn't explain it clearly enough to you. So you're just going to walk off and find another deal. So I originally did this to make it as simple as I possibly could. And then through experience, I started realizing, oh, wow, there's actually a lot of benefits to that for me. That's not affecting the partnership much, if at all. But that was the reason I did it. That's why I don't like waterfalls. I don't do acquisition fees. It's just a straight, I own this much of the company. You own that much of the company. That's it. So when distributions come out, I get this much, you get that much. There's a few other pieces in there, but again, it was all because I was just trying to keep this really, really, really simple for people.
Yeah. I saw a deal yesterday with 5 tranches.
Of course.
Immediate pass.
Well, everybody's trying to squeeze every drop of blood out of that stone. It's like, dude, you're going to make good enough money. You don't need to do that shit. You know, it's just crazy. They got to grab every penny they can. I want my investors to win while I win, because then they'll want to do another deal with me.
Yeah. Well, I think, especially right now where we're at in this very interesting market cycle, post-COVID, whatever you want to call it. I feel like there's more people trying to get more creative in those equity structures. Just for you mentioned, they're trying to squeeze the limit as much as they can to get as much juice out of it. But then to me, it just makes it feel more uncomfortable. Like when you have to get so creative just to hit a certain return metric, I don't know, it just makes me uncomfortable. You know what I mean?
Well, what I try to tell people that I used to coach. I don't coach anymore. Please, nobody hit me up. It's just too much. It takes too much time. But what I would coach people on is, you're going to have a promote. The most common promotes I see are 20 or 30%, right? So it's an 80-20 split or a 70-30 split. Well, look, almost every single deal that a sponsor does, a syndicator does, is a good deal for them, right? Because you get compensated with an asset management fee, most likely, maybe a property management fee if you own your own management company like I do. I have a construction company, so I've got an income stream coming there. And then you're going to get your promote. You might have an acquisition fee. So there's all kinds of ways we're going to get compensated through this. So what I try to tell people that, look, you're going to have lots of ways to monetize, and you're going to have a decent income stream from this property. Like I said, most deals work for you as a syndicator. So instead of an 80-20 split, if the deal, you really want to do the deal and the deal feels really good to you and you think there's a lot of upside in the future because it's in the path of gentrification, I need to own this property. Well, then lower your promote. Don't squeeze, like we're talking about, don't squeeze every dot. Lower your promote. Maybe you could do it for a 10% promote. And a lot of people don't like to hear that, but do you want to do a deal? You have to do a deal that works for your investors, or they're not going to give you any money. And if you need to lower your promotes, I've gone as low as 10% on my promote before, because it was a deal I felt super confident about, that it was worth it to me to lower my typical promote down to 10%. I still made really good money as a deal sponsor, but so did my partners.
Yeah. I think that just goes to the fact of just not trying to get greedy, right? You're not trying to hit the home run deal on one particular deal. I mean, like you said, if it's a good deal and it makes sense, you got to have the long-term vision to understand that, okay, this is, there's nothing wrong with singles, doubles, whatever, but, not being too greedy, is a big factor in, building your business and building trust with your investors.
I don't want people to think that Bruce is all high and mighty. Look, everybody does whatever they want to do, and it's fine. I don't begrudge anybody for taking those fees. Mm-hmm. It's just not something I choose to do. I've got a really good friend. He charges a 4% acquisition fee, and his investors are fine with it. Well, great. That's all that really matters at the end of the day. Do people understand your structure, and are they okay with it? If they are, fine. It's not my way. but it works for him. And there's nothing wrong with that.
Yep. Know your audience.
Exactly.
Yeah, absolutely. Absolutely. Well, Bruce, man, I'd love to hold you up all night, but unfortunately we're getting near the end of our time here. Just really, really enjoyed, learning more from you. Again, this is our second time being able to speak with you, and just always a pleasure. But before we wrap up, I've got a few more questions for you, and then we'll let you back to your evening. But first things first, man, what do you like to do for your continued education to further your own investing?
Oh, I'm just always reading. And I'll be honest, I've never read an investing book in my life, right? I just followed a coach and they taught me everything. And we're very plugged into the industry. So, we're very involved with the apartment association. We hang out with you guys at Jake and Gino to give them a little plug, the Wheelbarrow Profits. So I'm always surrounded by smarter people than me, like people like you dropped a name, Neil Baba. That son of a bitch is smarter than hell. So I just try to pick his brain anytime I get. So I don't read investing books. I read a lot of personal development books. I'm reading all the time, lots of podcasts. But honestly, I've been doing this long enough. I'm totally burnt. I shouldn't say this. I apologize now. I just got burnt out on listening to real estate podcasts because I would listen to 3, 4, 5 of them a day.
Sure.
And I just I'll come back to them because I love them. But right now I'm more on a personal development. I'm listening to Tom Bilyeu, Tim Ferriss, Lewis Howes, those kinds of guys. That's what I do, really.
Yeah, I love that. And it's a common theme amongst all the successful entrepreneurs, right? They never stop working on themselves. So I really appreciate that. But so Bruce, tell us, what have been some of the lasting lessons that you've learned throughout your journey?
So the biggest thing is, well, 2 things, right? Be self-aware. We've talked about that. Know who you are, know what you're good at, know what you suck at, and own it. The ego gets in the way a lot of times, and we don't want to admit that we suck at something because that's painful to say. I'm not good at something. Yeah. Shit, we're all not good at some stuff. Own up to it. Know what it is, because if you don't, you're going to hurt yourself or investors if you're a syndicator. Yeah. Right? So be self-aware. But then other than that, it's the big thing for me was I always preached this when I was in retail, when I would be training my managers. Empower your associates. Empower your employees, the people that work for you. Empower them to make decisions, to make mistakes. As long as it's not a mistake that's going to put you out of business, get you sued, and get somebody dead, let them take chances. Let them make their own decisions. When I started doing this, I'm learning a brand new industry. I'm a little freaked out. I'm scared to death. I've only owned this thing for 24 hours now. So I'm holding on. And finally, my manager came to me. She goes, would you let go? I'm like, what are you talking about? I'm like, oh, how dare you? She goes, you want me to let's pull some numbers out of my butt. $900 a month for rent for this apartment. And you're telling me I got to spend $4,000 to do a unit upgrade to get that $900. Yeah, that's what I was taught. That's what, the book said. That's what my coach said. Well, I'll tell you, if you'll get out of my way, I can clean it up and make it safe and still get you the $900. You don't have to spend that $3,000 to $4,000. I'm like, no chance. But you know what? Go prove me wrong. She proved me wrong. I was like, I completely forgot everything I preached in retail. I basically hamstrung her. I locked her arms behind her back and said, go run this property for me. So it's empowering others, hiring smarter people than you in those selective disciplines, give them the tools, the expectation, hold them accountable, but get out of their way. Let them do the job you hired them to do.
Love it. Love it. You got to trust the people that you put in place and let them do their work, man. Love that. So, well, one of my next follow-up questions to that was going to be, what would be one piece of advice that you'd give to the listeners so that they can help grow their business?
Don't be scared. I really believe that, everybody says it, but it's the truth. Don't be scared. Scared is going to keep you exactly where you are. It's another quote. If you always do what you always did, you'll always get what you always got. It's Ford. Henry Ford said that. And it's true. Many people are not happy. They're not satisfied. They're not fulfilled. They don't have balance. But they're scared to try anything other than the same shit they're doing right now. Well, you know where that ends. It ends with you not being happy. Don't be scared. You can't do something that might end up putting your family under a bridge. I get that, but at the same time, you have to take chances on yourself. I have a friend that almost killed himself because he was so miserable in his job. It was wearing on him. It was wearing on his family. And he sat in his driveway one day with a gun in his mouth. It's like, dude, what the fuck? What the heck? There's nothing worth that. Well, but if I leave, it might know you're about to be dead. Don't be scared. Get yourself as prepared as you can, but get out there, guys. Make moves, make things happen. Listen to smart people. You know, my guy is Gary Vaynerchuk. You know, listen to smart people. If the people around you, I don't know how to give short answers, by the way, I'm sorry. If the people around you are not supporting you and lifting you higher and pushing you, quit hanging around with those people. They might be fantastic people, but they're not helping you. And then the people that are saying, oh, you can't do that. You're not smart enough. You're not pretty enough. You don't have enough this, or you don't have enough money. Walk away from them. Get out there and do it. So just believe in you, move forward, and make a change if that's what's needed.
I love it, man. That's phenomenal advice. Mic drop. So, all right, Bruce, listen, tell the listeners how they can learn more about you, the apartment guy.
Well, you can go to apartmentguy.com, which is apt-guy.com. If you're interested in seeing some of the deals we're working on, because we do 506Cs, right? So we're allowed to talk about this stuff. You know, we've got a couple of ground up developments we're working on in Nashville right now. If you're interested in any of that stuff, you think maybe you would want to invest with me or at least see what we're working on, apartmentguy.com, apt-guy.com, go to the investing link or the investment link, and you can get on the website, get on the list and see what we're starting to work on. But also the book, we've talked about the book a little bit. Also on that website, the landing page of the website, apt-guy.com. If you'll give me your email, because I got to get it to you somehow, right? I'll give you a free copy of the book. It'll be a high quality PDF. But again, I'm not trying to make money off the book. I'm not trying to get clients. I told you, I'm not coaching anybody anymore. Don't have time for it. I'm just trying to help people understand what this really is. It's a great thing, but please understand what it is you're trying to get into. So please get a free copy of the book. And that's really it. You can follow me on LinkedIn and Instagram. I'm fairly active on those.
Awesome. Bruce, phenomenal conversation. Really, really appreciate your time and just the value that you're giving to the community. We'll make sure all of those resources are in the show notes as well as on the screen here, promoting your book. And we look forward to speaking to you again soon, man.
Appreciate it, guys.
Thanks, Bruce.